In today's video, I'll give you everything you need to know about the Canto chain. Welcome back to Dynamo DeFi. Today we're talking about what makes Canto unique, the Canto Tokenomics, the team behind Canto, the future prospects for Canto, and then some risks that you should know about before investing in Canto. As always, although I talk about several crypto projects in this video, this isn't a suggestion that you do or do not buy any of them. This is for educational purposes only. Now, let's get into it. First, a bit about what exactly Canto is and what makes it unique. Canto is an Ethereum-compatible Cosmos chain, and where they seek to innovate is interestingly not on anything to do with tech, but instead they seek to innovate on economics, incentives, and community. And the way that they describe their vision is that they believe that DeFi primitives are best as free public infrastructure. So rather than the way that most DeFi apps are on Ethereum, where each DeFi app is its own application, often with its own teams and its own fees that it collects, the aim of the Canto contributors is to create a DeFi ecosystem where instead all of those things that you have in a DeFi ecosystem are free public infrastructure that anyone can use and build upon. And to kick this off, they launched Canto DEX, which is a zero-fee DEX for liquidity providers. And they have pairs like Canto Atom, Canto ETH, Canto Note, more on what that is in a second, and then Note in USDC. Note is the stable coin on Canto. And you can access that DEX through the Slingshot Finance app. They also launched the Canto Lending Market, and the Canto Lending Market allows you to borrow stablecoins with a variety of assets as collateral. And interestingly, because Canto is both in the Cosmos ecosystem as an IBC connected chain and also kind of an Ethereum sidechain because it's Ethereum compatible and you can bridge ETH assets there, you can supply either Atom, Canto, or ETH as collateral, or a variety of stablecoins, or even LPs between these things. And we'll talk about this more when we talk about DeFi on Canto, but one thing that's important to note is that many of these pools have really, really nice rates right now. You have, for example, Canto Atom is 170% APR, Canto ETH is 153%, and Canto Note is 184%. And if you're bullish on Canto anyways, then you can earn very, very nice rewards this way. And that brings us to the final piece of free public infrastructure that launched when Canto launched, and that is Note. And Note is a fully collateralized stablecoin that's issued from the Canto lending market. The other thing Canto has done to incentivize free public infrastructure is that at the end of January, they passed a governance proposal, Governance Proposal 43, which enabled something known as CSR, and CSR is contract secured revenue. And what that basically means is that if you're a developer and you write a smart contract on Canto, then you will get a percentage of all of the gas spent on that smart contract forever. And that's interesting because that then gives developers the incentive to build public infrastructure on Canto, because if Canto blows up and then a lot of people are using that public infrastructure, that developer is going to get a portion of the gas fees in perpetuity. And while I don't know if this particular experiment will succeed, I do know that attracting developers is one of the most difficult and most important things that a crypto ecosystem can do. Now let's talk a bit about Canto's tokenomics. If you look on CoinGecko, then Canto's current market cap is around $160 million with a fully diluted valuation of $360 million. However, it should be noted that Canto does not have a max supply at the moment. So in theory, if you're talking 20 years down the line, then this supply could inflate over $1 billion, but thinking in that sort of time frame doesn't really make sense in crypto or in this sort of coin. So for the purposes of this, we would say that just over half the supply is not in circulation yet. And if you look at the allocation of the total Canto supply, then you can see that 13% goes to contributors. There's not an official team. We'll talk about that in a second, but you can think of the contributors almost as like the team bucket, and that's relatively low percentage there. 2% goes to the settlers of Canto. Those are people who participated in the incentivized testnet and got an airdrop. But 80% goes to some form of liquidity mining. So that is a huge percentage that goes towards the community. And the cool thing about that is that if you're worried about your supply being inflated, well, you can actually get your cut of that, right? You can get this 150%, and that's far, far higher than what the overall Canto inflation rate is. And if we do want to know the inflation rate and the release schedule, then Masari created this cool graphic. And if you look at this, you can see it's about a month old, but still holds. To get to even 1 billion, we're talking 4-5 years down the line. And what about the Canto team? Well, like I said before, there isn't exactly a Canto team. It's a blockchain that a group of core contributors built together, but there's no official Canto Foundation, there's no legal Canto entity. It's just a group of developers who built this thing, and then anyone who wants to can set up a validator and contribute to the network. That being said, they do have some very accomplished people on board. One of these people is Scott Lewis. Scott Lewis was the co-founder of Slingshot Crypto, a DEX aggregator, and also DeFi Pulse. DeFi Pulse has been one of the premier places for DeFi data for years. If you do decide to bridge to Canto, then there's some interesting things you can already do on chain. First thing, like I mentioned before, is you can use their native lending market to lend out either Atom, Canto, or Canto Atom LP, Canto ETH LP, Canto No LP. And remember, No is their native stablecoin. And personally, I find these LPs the most compelling simply because the liquidity mining incentives are so good that if you want to hold exposure to Canto anyways, which personally I do have a position in Canto, full disclosure, then earning 150% APR on it is almost a no-brainer to me. Another interesting place that you can use DeFi on Canto is a new DEX known as Velocimeter. Now, this is very new, and Velocimeter is a fork of Solidly, and Solidly forks have been doing very well in general recently. But what attracted me to this is, aside from the fact that Solidly forks are doing well, it's that the APRs on a lot of these pools are just extremely high. You have, for example, Canto Atom earning 300%. You have No and Canto earning over 200%. And then if you decide you want to hold exposure to the native Velocimeter token, which is Flow, then you can pair that with Canto and you can earn over 1200%. Of course, this is highly inflationary. That's the only reason these APRs are so high. That being said, because I'm interested in this as a Solidly fork, as you can see here, I did allocate a small amount of money towards this position. But what most people have been doing on Canto is actually not DeFi. Most people who have been bridging over are trading NFTs. And if you want to trade NFTs on Canto, you can go to alto.build, and this is a marketplace with 0 trading fees, and creators set their own royalties. So fitting in accordance with Canto's initial goals and ideals of having free public infrastructure. Now I want to talk a bit about the current prospects for Canto, as well as some risks that I see at the moment. If we go over to DeFi Llama and we look at the top chains by total value locked, then we can see that Canto has already done quite well. Even though it launched only a few months ago, it already has over $180 million in TVL, over $160 million in stablecoins on the chain, and in the past 24 hours, it had $11 million of swap volume. And if we look at how that swap volume compares, that makes it the 10th largest chain by swap volume, on par with Solana over the past 7 days. Another interesting thing that I think for Canto is that it's actually connected to the Cosmos ecosystem via the IBC. So it's connected to Osmosis, it's connected to the Cosmos hub. And what makes that interesting to me is that if Canto can continue to gain traction, then I could see it becoming one of the main chains that people use to do DeFi and to exchange coins in the Cosmos ecosystem. Another thing I like about Canto currently is that even though the price has dipped from its peak over a month ago, the TVL actually hit a new all-time high only a few days ago. So that means that new money is continuing to flow into the chain, even as the price cooled off. And although I do like a lot of things about Canto, and I decided to engage in that ecosystem myself, I do see a few important risks that I want to call out right now. The first of these is that their incentive structure with contract secured revenue, which rewards developers for gas spent on their contracts, potentially incentivizes developers to build contracts that use too much gas. Another risk is that many builders in the Canto ecosystem, and this is also a strength, are major developers and early adopters from the Ethereum ecosystem. However, the concern is once those developers are able to make a decent amount of money from Canto, and some of them are already doing that, will they stick with the Canto ecosystem, or will they cash out their gains and convert back to Ethereum? If you found this video helpful, be sure to like and subscribe for more content like this. And until next time, this is Dynamo DeFi.